Everyone wants to know whether 2026 is finally the comeback year for housing. Nationally, the answer looks more positive, but Sevier County is not a normal housing market. It is part residential market, part second home market, and part short-term rental investment market. So the real question is not just whether housing improves in 2026. It is what that improvement actually looks like here, and what agents should be saying to clients right now. The National Association of Realtors is broadly optimistic about 2026. Economists have projected roughly a 14% increase in existing home sales nationally, with mortgage rates around 6% on average and home prices still rising modestly rather than falling. They also emphasize that inventory is higher than a year ago, buyers have more choices, and the lock-in effect is slowly easing. Nationally, the story is more opportunity than 2025, not a return to 2021. More movement, but uneven movement. Pricing matters more now. NAR says inventory is about 20% above a year earlier, giving buyers more choice. NAR also says the recovery will not be even across all markets. Markets improve fastest, where inventory, incomes, and affordability line up better. Middle-income buyers are still constrained nationally and can afford only about 21% of listings, versus about 50% pre-pandemic. So yes, nationally the setup is better. But Sevier County has to be judged by its own cycle, not just the national average. Sevier County appears to be in a normalization and recalibration phase, not a fresh boom. Based on Sevier County sold data files, the market arc looks like this: 2018 and 2019, healthy baseline growth. 2020, resilient during disruption. 2021 and 2022, exceptional surge. 2023 to 2025, normalization. Slower velocity, more selectivity. 2026 so far. Continuation of normalization, not a clear breakout. 2019 shows us the pre-pandemic baseline. 2020 shows us how unusual Sevier County is. While many places were disrupted, Sevier County benefited from drive to tourism, more flexible work patterns, and increased cabin and second home demand. Then 2021 and 2022 were the real surge years. Since then, we have not seen a collapse. We have seen digestion. We may be seeing recovery in transaction count without full recovery in pricing power. The market is probably healthier than the headlines suggest, but less forgiving than it used to be. This is a market where mistakes are more visible now. So if that's the market we're in, the next question is, what numbers actually matter most? For 2026, the most useful local metrics are not just price. They are sales volume, median sold price, median days on market, median sold price per square foot, price reductions, inventory depth, tourism demand quality. The National Association of Realtors itself cautions that average price can be distorted by outliers and notes a methodology break in its National Average Price Series between 2019 and 2020, which is a good reminder to lean more heavily on median-based readings when discussing the, quote, typical market. From Sevier County data, the local story appears to be volume improved in 2025 versus 2024, pricing held up better than speed. Days on market stayed materially higher than during the frenzy years. Price per square foot has softened from peak levels more than top-line prices suggest. Don't just ask if prices are up. Ask whether homes are moving faster, whether reductions are increasing, and whether the price per square foot is supporting the seller's expectations. And that takes us directly to the first client conversation: sellers. Tell sellers this is not a panic market, but it is also not the kind of market that automatically forgives overpricing. Sellers still have opportunity in 2026, but they need to price to the market they are in, not the market they remember. We already know this. The National Association of Realtors says homes priced even 3% to 5% above market are more likely to face longer marketing times and deeper eventual reductions. Economists also shared price cut patterns that worsen materially as days on market increase. If you overshoot, the market is more likely to punish you now. Condition, location, and uniqueness matter more when buyers have more choice. For cabins and income-producing properties, buyers are more likely to scrutinize the story behind the numbers. The best way to protect price is usually better upfront positioning, not a later chase downward. Price for the market you have, not the market you miss. Now let's flip it around. What do we say to buyers who are sitting on the sidelines waiting on rates? Tell buyers that waiting for lower rates might help on payment, but it may also bring back competition. The right answer is not just about rate. It is about payment, competition, and fit. NAR economists say a 1-point decline in mortgage rates could expand the national pool of qualified buyers by about 5.5 million households, including about 1.6 million renters. But they also stress that inventory has to cooperate. As of March 26, 2026, Freddie Mac said the average 30-year fixed-rate mortgage was 6.38%, up from the prior week, showing how fragile the rate outlook still is. Waiting may lower payment if rates improve. Waiting may also increase competition if more buyers re-enter at once. In Sevier County, buyers should watch not only rates but also inventory quality, reductions, days on market, whether negotiability is improving. Don't just wait for the lowest rate. Watch for the best combination of payment, inventory, and leverage. Sevier County is not just a buyer-seller market. It is also a cabin and investment market. Sevier County looks less like a pure appreciation play today and more like a market that rewards cash flow discipline, uniqueness, and operational quality. If you are buying a cabin in 2026, do not underwrite it like it is 2021. Underwrite it like occupancy can flatten, nightly rates can level off, and buyers can get pickier. The Great Smoky Mountains National Park remains a massive demand engine. The National Park Service reported 11.5 million visits in 2025. And its park stewardship page says the park drew 12.2 million visitors in 2024. It also noted that visitors spent about $2.2 billion in gateway communities in 2023. Separately, Sevier County reported $3.93 billion in visitor spending in 2024, up 2.03% year over year. Tourism is still strong enough to support demand, but that does not mean every cabin is equally protected. What matters more now? Location, uniqueness, management quality, reviews, amenities, realistic underwriting, exit flexibility. Sevier County still rewards good cabins, but it is becoming less forgiving to average ones. And that leads to the big question behind all of this. What is actually improving and what is still fragile? What is improving? National housing activity outlook, buyer opportunity if rates cooperate, inventory relative to a year ago, ability to negotiate compared with the frenzy years. What is still fragile? Mortgage rate direction, affordability, middle-income buyer depth, tourism sensitivity to consumer confidence, cabin market assumptions, seller pricing discipline. The Federal Reserve said on March 18, 2026, that uncertainty about the economic outlook remains elevated, and that the implications of developments in the Middle East for the United States economy are uncertain. Wars matter here when they feed into oil prices, inflation, treasury yields, mortgage rates, consumer confidence, discretionary travel. That connection is already showing up in housing commentary and mortgage rate reporting, with the recent rise to 6.38% linked to energy price and war-driven inflation concerns. Improvement is real, but it is conditional. So if that's true, what should agents stop saying and start showing in 2026? Stop saying, rates will definitely come down soon. Smoky's real estate always goes up. If it doesn't sell, we can just wait, and the market will catch up. This is just like 2021. Tourism alone will carry the value. Start showing actual days on market trends, reduction patterns, median sold price movement, price per square foot direction, inventory mix, tourism trend context, payment scenarios at multiple rates, realistic cabin revenue assumptions. In 2026, credibility beats cheerleading. The read on Sevier County in 2026 is this: the market is healthier than the fear suggests, but more disciplined than the boom years trained people to expect. National conditions are improving. Local tourism is still powerful. But this is a market that increasingly rewards accurate pricing, realistic expectations, and strong operator quality. So the opportunity is real, but so is the need for better conversations. Thank you to the Great Smoky Mountains Association of Realtors for allowing us to be a part of your morning.